What's up, everyone? Bitcoin is setting at $66,900. And yesterday we saw a sell off of nearly $10,000 in just a couple of hours. So is it time to sell Bitcoin or should we be buying more? I also want to discuss what is going on in the other stock markets today because we have to look at the other stock markets if we want to understand what is going to happen in these higher risk assets. And I also want to discuss some history in the stock market that could be playing out sometime by the end of this decade. Something that's important we should all keep an eye on and think about when we're investing and trading. All right, guys, if that sounds good to you, be sure to hit the like button. And if you want to see more videos like these, be sure to subscribe and let's get started. So, what is going on uh, with the federal funds rates? Are we going to be higher for longer? Well, Tom over on FX Evolution posted this on Twitter that the super core inflation is going back up again. So are we going to be higher for longer? Well, we'll have to see. I do believe, overall we are in a downward trend with inflation, but it is a bit sticky, so it's something we need to keep an eye on because that will determine what happens in these crypto markets and risk assets. Another thing I want to discuss is the high yield junk bonds, because the bonds leads the stock market. And so if we look at these high yield junk bonds, they typically give us a better indicator of which way the stock market is going to head in general. And it's been consolidating here in this range since the end of 2023. And if we start to see bonds go down, then we probably should expect the S&P and the stock markets in general to go down. And this could lead into Bitcoin and crypto assets as well. So if we take a look at the S&P, we're in this ascending channel, and if we do start to break out of this channel, we will break out of this channel. It's just a matter of question of which way. And so if we do break down out of this channel to the downside, then we could see Bitcoin, Ethereum, and some of these other altcoins sell off. So where could the S&P go from here? Well, if we zoom out a little bit, we can look at this and we see this line here. This line is the previous all-time highs. So if we break down, I would suspect that we are going back down to somewhere around this 480 level on the SPY. And just to get a perspective of how far that is from the current price, that is about 6.5%. So if we see a 6.5% correction, we'll most likely see more in the higher risk assets. This could lead to, a 20% correction or something like that, possibly on Bitcoin. The Qs also in an ascending channel. Previous support from the all-time high is down here. So that could also lead to a sell off, or if we see a sell off in some of these magnificent seven companies, that could lead to the sell off. I think overall, the Mag 7, especially NVIDIA, with the momentum they have, will continue to grind higher for a while, but eventually those will come back down and correct. And so, could that be a catalyst for a stock market sell off? Well, we'll have to see. But, it's just something we'll have to keep an eye on. And it's really hard to say which way things will go or what might cause the markets to sell off. But um, the one thing I really wanted to discuss today uh, is the 100-year cycle. And this is something I believe will probably play out within the next decade. Um, that's why I decided to get into crypto. I see what's coming. The world is changing faster than ever, and it's going to be, in my mind, the next uh, generational asset. Are we going to see the great reset that some people have been talking about for the past few years? We could. Uh, I think it is probably coming. It's just a matter of probably when. Um, but in the short term, in the next couple of years, I think we're still safe. I think we're still fine. I think it's just going to be the previous money uh, regime of fiat currencies is going to be inflated away, and that's going to cause more and more people to move to Bitcoin and digital assets. Plus, if you look at technology adoption over time, um, there's new technologies that come out and they change the world. And with social adoption, it's just going to spread to more and more people. More people are going to catch on. More people are going to want to be holding assets like these so that their money is not inflated away. Because right now, times are tough for a lot of people. And, you want your money to grow, obviously. And how do you beat inflation? With Bitcoin. The only other answer I can see to that question would be to create multiple streams of income because it's going to be hard for a lot of people. And the people out there working 2 and 3 jobs just to make ends meet, it's going to be especially hard on them because you only have so many hours in a day you can trade your time for money. And so that's why it pays to be financially wise. Um, and it's the only way that I really see how a lot of people get out of this. So let's go back to this 100-year cycle. Um, could we see something like the Great Depression play out again? I think we could. I don't know if it'll be as extreme. It might be more like the dot-com bubble, where instead of having, I believe this was in total nearly a 70% correction in the 30s, whereas the dot-com bubble was more like 30 to 40%. So we'll see, but it does kind of look similar here. If you look previous to the Great Depression, we had 21 years of this sideways action, followed by a run up, another 17 years of sideways action, Then we had this just exponential rise. And if you kind of look at what happened back in the 60s and 70s, we have a similar 20 some year period where we had sideways action, a step up through the 80s and 90s, and then another long period of sideways actions through the 2000s, 2010s, and we've really seen uh, the markets really take off and money printing taking off, going exponential. And right now, there's just not much that anyone can really do about it. Uh, the government just has to keep printing every time we run into a problem, and then they have to raise rates to slow things down. So, how much control, how much longer can they sustain this? That's the big question. Because at some point, it has to come to an end unless they figure out a way to start controlling the spending that's going on. And with every new election, they just pass it off to the next party, the next people that take over, and so no one's really concerned about the long term. I mean, I'm sure they're worried about it, but once they reach that level, they're in there just to really um, show what they can do and try to prove their points, and the can just keeps getting kicked down the road. So enough of that. Let's go on to Bitcoin. Bitcoin is at 66,000. It looks like it's falling a little bit at the moment. Um, but, I wanted to zoom in here a little bit and talk about this pullback we had yesterday. This was a pretty big move of about $10,000 sell off in a matter of a couple hours. And as you can see, that was about 15% pullback. This appears to be a liquidation hunt. There was a lot of interest setting in these lower areas where they came down and stomped those out, took that money, and then guess what? BlackRock bought more Bitcoin. Yeah, they bought more Bitcoin. So is this some sort of market manipulation that they're trying to do here, or was this sell off deserved? And where are we going from here? Well, if we look back at some of these pullbacks we've had previously this year, just to get an idea, we've seen about a 20% pullback, and we'll look at some of these other ones. This was about a 20% pullback. We also had this one back in April last year, which was 20%. And my point of saying this is all these are actually around 20% this cycle. In previous cycles, they were more like 25 to 30%, 40%, 50%. So could we see another 40 or 50% pullback in Bitcoin? Um, it's possible, but I don't think it's very likely. I think worst case, well, let's discuss a couple options. First, we could accumulate here. This would be good for altcoins and the other layer ones. I think the most likely case is we do pull back more, a little bit more, maybe down to this next level to around 51,000, 52,000. This would be more in line with a 25% pullback. And so I could definitely see that happening. Um, Beyond that, your next level would be around this $48,000 level. Um, I think that's worst case scenario. I don't think we're going lower than that. But all these pullbacks should be good buying potentials. And so I expect most of these dips to be met with buying. And one other thing I wanted to show you is this moon phase. I know this sounds crazy to some people, but I could see how this plays out. So this is the phases of the moon. All these white dots mark full moons, and the blue dots mark a new moon. And so we're about to print another new moon. And from, I believe it's going to be this weekend on Saturday or something like that. So we could see markets go a little bit higher this week. We could try to go back and test those all-time highs and possibly break through. I think that's still a real possibility, but I do suspect that we probably will pull back a little more, maybe come back down around to this $61,000 range, retest that. Maybe we accumulate in this area. It would be good to accumulate here for a while and cool down a little bit. The fear and greed uh, was in extreme greed. It's dropped back down to 70. So I think we will cool off here probably a little bit, um, and then reevaluate, and then it'll be more to the upside later this year. So let's talk about the Bitcoin rainbow chart. And as you know, we're coming into the halving. We're still in this hodl zone where it's not cheap, but it's not expensive. Good place to hold. It's always good to stay calm in times of volatility and really think about your next moves. So anytime you're in question, slow down and zoom out and see where we're at. And according to this rainbow chart, here in the next year or so into 24 and 2025, this shows we could go as high as the $200,000 to $300,000 range. Again, I still think more conservatively, we'll probably go to like maybe a 120 or a $140,000 range on Bitcoin. Um, I I'm a swing trader, so when we start getting to those upper levels, I'm going to be taking profit. I just let you all know that um, in advance because that's what I have been doing in markets for the past 15 years, swinging to cash, swinging to gold, swinging to different stocks and different markets that are moving. That is mainly what I do. I'm not really a day trader, um, but I know some of you all may watch this for more information on that. But let's discuss the Ethereum Bitcoin dominance. So, the Ethereum Bitcoin dominance broke out of this trend earlier this year. We went back down, retested this set of higher lows as well, and we're back above now. And as you can see here, this line here indicates uh, this previous resistance and support during the last bull run. So it appears that the Ethereum Bitcoin dominance is getting ready to possibly break higher, which means Ethereum will move faster than Bitcoin. And that also coincides with the expected spot ETF for Ethereum that could be approved in May. And so, what could that do for the price of Ethereum? Well, obviously, it's good for Ethereum. We've seen what it's done for Bitcoin, more institutional buying, more people uh, that didn't have access to this or didn't want to fool with trying to get access to Bitcoin and Ethereum and some of these other altcoins. Um, Now they can gain access through a spot ETF. And so let's discuss where Ethereum could be going. Well, it's currently at 37,550 and it could go a lot higher. I think we're probably in a zone of accumulation, but the next level here could be the 4,800. But first, we'll have to get through the $4,000 level, even numbers, psychological level, the 0.786. And after that, it could go a lot higher. I suspect Ethereum will probably go to probably around the $7,000 to $8,000 range. Some people are calling for higher, 10,000, 13,000. I don't know that we go that high, but there's definitely a lot more room for Ethereum to run here. Another coin that is holding up well is Solana. Solana is holding this upwards sloping trend, and it's about to break out of this next area of resistance. So if we zoom out here, we can look back and see this was previous resistance when we broke through and previous support during the last bull run. So once we get through this zone, Solana could go upwards of this range here, this 175 to 190. And so there's a lot of upside left on Solana, and this coin could go, from what I hear people talking about, as high as $1,000. I don't think it'll go quite that high. I could see, uh, I could see 500, 600, 700, but beyond that, I would be skeptical. Um, Generally speaking, whenever I take these positions as swing trades and I try to accumulate here in these lower ranges, then I will set kind of some price targets of where we think we may go. And then generally, once we get about 80% to that price target, then I'll sell. I've done this with a lot of my swing trades, even on stocks, where I'm just looking for like a 10% upside or see something that has a 10, 20, 30% upside. I try to get my 10% and get out. And so if I don't think there's a chance that it'll hit that 10%, then I usually don't even take the trade. But yeah, that's normally how I like to trade in the stock market. Um, and I still have a good bit of my positions in the stock market. Um, Although I will say I am more crypto based nowadays. Uh, but I still think, there's a lot of opportunities there, and gold being one of those. But let's move on to Link next. So this is Chainlink. This is like the glue that holds all of these blockchains together, and this is on this upsloping trend and consolidating here. It is holding strong. Let's just take a measurement on this from this high here down to where it went yesterday. So you can see it pulled back about 20% uh, yesterday when Bitcoin sold off, but it bounced right back to the middle of this level. It seems to be holding pretty strong. So as long as we stay in this area, I do believe this is a good accumulation zone for Chainlink. And worst case scenario, I think it may possibly go back down and touch this trend line, but I don't think it'll go any lower this crypto cycle unless something really bad happens and the economy tanks or there's a war or something like that. But I think Chainlink is in a good buy zone. And if we zoom out here a little bit, the next levels for Chainlink is 25 to $28 per coin. And I think Chainlink is probably the best layer one out there besides Solana. And of course, you have Ethereum. But I think these are the three strongest cases that I see in these altcoins uh, that have real use potential and are out there actually working on projects that are going to change the way the financial world works. Because obviously these are high risk assets, but whenever you're looking at something that's high risk, you also have to have understanding where are we going in the future, or at least have a general idea. Like I said, the world is moving to more digital, and so a lot of people are, um, you know, going to social media and stuff like that as a way of working. There seems to be a real soulful uh, vibe of generation of coming up, and more people wanting to figure out ways or make an additional income off their hobbies or uh, their other side interest. And so I think you know the digital currency is going to be part of that. I think that the new generation is going to adopt this technology, and this will be the way forward. So, where can you buy these assets? Well, like I said before, I used iTrust Capital to roll over a portion of my IRA. It allows you access to Bitcoin, Ethereum, and some of these other altcoins, as well as gold and silver in a tax advantage IRA. It allows you to roll over a portion or all of your 401k or IRA into iTrust, and it's a good app to use if you want to get started investing in some of these other digital currencies and gold and silver. Next up, I want to talk about a couple of these um, crypto stocks that you could look to buy, and one of those being Coinbase. Coinbase being the exchange where a lot of people go to buy their crypto. And so, as these digital assets Bitcoin and Ethereum and Solana uh, go up in value, then obviously apps like this are used more, which drives up their revenue and their stock price. And today, Coinbase is currently holding at 20 $225 per share. And as you can see here, it is meeting this resistance, previous resistance here. The next point higher will be 250 to 265 a share, and then potentially upwards of 325 to 450 per share. So Coinbase looks like it could be a good investing opportunity if you want to get gains similar to some of these other layer ones, but in the stock market. Another one is Robinhood. That's HOOD is the ticker, and it's currently sitting at $16 a share, and it's broke through this resistance and climbing higher. It'll probably come back down around, maybe touch. I think anywhere in this zone is a good buying opportunity for Robinhood, because when you zoom out, there is a lot of upside potential. And once it breaks out of this area, then it should move to the $26 to $28 range. And after that, it could move up into the $34 to $37 range. So this is another one of those stocks that offer you uh, much more upside in a bull market, similar to some of those layer ones where you can get your 2, 3, 5x returns. And the last one I wanted to mention is Marathon Digital. It is a mining company, a Bitcoin miner. So they mine the blockchains um, that produce the Bitcoin. So right now it is setting at $22.40. It has broke this previous resistance, holding this upwards trend. I think anywhere in this area is a good place to buy Mara. That's MARA. And once it breaks out of this next zone here, this could go much higher, up to $41 to $48 per stock. So that's easily 100% gain. And it could even go much higher. You see here in the previous cycle, it topped out at around $80 a stock, and it could easily do that again. So that is some of my crypto assets that I am looking at purchasing. Again, a lot of these are high risk. I think Bitcoin is definitely safe, especially from a long-term perspective. I think all these are very safe, um, but some of these higher risk assets, if the economy gets bad, could take a big hit. So always keep that in mind, and keep in mind how much you're willing to risk on this type of assets. A lot of these assets for me are a smaller portion of my portfolio, like 1%, um, and I'm spreading that out across multiple assets. I kind of like the idea of spreading out across maybe like 10 assets, because there will be winners and there will be losers. But the winners, generally, the gains you make off the winners far outweigh the losers. And I don't expect any of these to go to zero uh, anytime in the foreseeable future. Um, you know, 5, 10 years down the road, it's really hard to say. But anytime in the next couple years, I definitely think all these that I just shared with you will do very, very good in a bull market. So I'm using TradingView now to track all these things. So I have a better way of keeping an eye on things. I've used watch list on my E-Trade app and stuff like that, but it just gets really cumbersome. So that's why I switched to TradingView. And if you want to switch to TradingView, it helps you analyze the markets and it allows you to connect with other professional traders around the world to get their analysis and ideas on stock markets and crypto. There's a lot of good guys out there. There's a good handful of them I listen to every day. So it allows you access to that. Plus, it really does allow you to uh, do your own research and then commit to your trades because commitment in anything is what it takes to be successful, whether it's relationships or your goals. And so that's why I use TradingView. Um, and whenever you sign up for TradingView, you can get $15 towards the purchase of your subscription anytime you invite a friend. And so I left my referral link below. If you're interested, you can click that link, get TradingView, set up your charts so it can help you analyze the data if you want to take control of your own investing and really not necessarily leave it up to somebody else to do it for you. All right, guys, I hope that helps some of you out there. I hope you learned something. Drop comment below if you got any questions. Be sure to hit the like and subscribe button. And until next time, be legendary, guys. Have a good day.